We have seen a spectacular collapse in volatility post-Brexit as equity markets have, especially in the US, moved to new highs. We're seeing investors being calm despite the Italian banking crisis, and we're seeing the VIX, which is an index tracking the implied volatility in the S&P 500, trading below 12, and it's the same trend that we're seeing in the Euro Stoxx 50. So collapse in volatility, that means you're seeing lower prices on, for instance, puts on the S&P 500. You're paying 1.5% premium on an at-the-money put with expiry in the next 6 weeks. You can also go for a mid-December put option at the money. You're paying around 3.7% premium, which I don't think is a high price to pay for considerable protection of your equity portfolio should various event risk happen in the second half. US presidential election could be one of those event risks, with Trump being president. That could stir up equity markets because of the uncertainty of what's going to happen. You have the earnings recession, which is still continuing based on the numbers that we're seeing from the US and Europe. You also leading indicators on large on the large economies of the world. The US and Europe and China are still weak, and in the US and Europe they're still trending down. And you have equity valuation at very high levels in the US compared to historic levels, but also against other equity markets in the emerging markets and other developed equity markets. So I think a put option in the S&P 500 looks extremely attractive at the moment.